Hi everyone, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and this is just a couple of YouTubes that I put together each week. First one is my macro outlook, followed by some technical analysis on some of the contracts that I trade. So I hope it helps you prepare for next week. Okay, so let's take a little look at what we saw last week. Stock indices, the S&P and the Dow, they started the week at record highs and then spent the next few days just dropping. And it was only Friday afternoon really that they made any recovery at all. And of course NFP was higher than expected. That came in at 303,000. Although, you have to take a deeper dive into some of this data. And to me, it just doesn't seem as positive as it looks. Full-time jobs are still dropping. They're still going lower. And they're being replaced by part-timers. And of course, part-timers earn less generally. So I wouldn't call that a positive. And I certainly wouldn't think that that's pressure on inflation. So, how Powell will see that, I don't know. But that, the unemployment rate did dip back to 3.8% from 3.9. Average hourly earnings were in line, and then they're up sort of 4.1% year on year. Now, the dollar had a bit of a mixed week, but then, just look at gold. It's amazing. Yet another record high on Friday. It hit over $2,350. Oil was also another one that was higher. Obviously, that's on concerns of what's going on in the Middle East. Traders are waiting for how Iran's going to respond after that attack from Israel. And of course, there is considerable pressure on the Israeli PM to make a deal to get back any remaining hostages. The big question is are there any of them still alive after 7 months? And of course, Rafah still remains a target and possibly the final onslaught by Israel, because they've pretty much been through the whole of Gaza now. And, if that is going to be, considered to be their final action, to the end of this sort of military strategy that they devised, the problem with Rafah is that, the potential cost to civilian lives could be devastating. And there is a bit of tension within Israel itself. There's a lot calling for there to be a general election because I think that they sort of look at, maybe they're just going a little bit too aggressive with what they're doing in Gaza now. Um, you know, it's a powder keg, isn't it? It's just a dangerous situation. The tension's really high in the Middle East. And then, of course, you've got Houthi. They remain a danger to the ships, any that are risking the shortcut through the Red Sea at the moment. Then we look back at the other war, Ukraine. They still seem to lack the weapons against Russian forces. Again, this is partly held up by politicians in some countries, but there also seems to be a lack of available supplies, because many countries are trying to obviously boost their own defences too. For me, June still looks the most likeliest month for central banks to begin cutting rates. I know obviously Switzerland's already done it, but I'm sort of focusing on ECB, BOE, and the Fed. And it's possible that the ECB could start a little bit earlier. They might jumpstart, and maybe we're going to find that out very, very soon, like this week. Now, that being said, there's been a lot of doubt now after the NFP numbers that the Fed will still cut in June, or potentially cut in June. But I'm going to stick to my view that they will. That's going to be their first. And, with these rate cuts, if they do start to sort of follow, because, once the Fed starts and Bank of England, ECB, Switzerland's already done theirs, possibly by then Bank of Canada and a few others are going to follow as well. that, that could again add another little boost to consumer confidence when they see the cost of borrowing coming down. But of course, that is also a risk that it boosts consumer demand. And of course, if companies start to see that demand increasing, the big question then is, will they raise prices again? This corporate greedflation's been rife, pretty much since inflation began. And, for them, they could take advantage now anytime they see that opportunity to lift their profit margins again. For me, though, for inflation, oil does seem to be the biggest danger at the moment, and obviously preventing the central banks from achieving their 2% target level. Now, when we think about recessions, I mean, yeah, there's been some technical recessions, but I think the fear for anything deeper than that seems to be receding now. Never say never though, so let's wait and see. But we'll probably get a little bit more insight this week to anything that's obviously going to happen geopolitically. But then we've got a lot of data being released this week. In the UK, we've got GDP. In the States, we've got FOMC minutes coming out. There's lots of Fed speakers again. And then, of course, we've got their inflation data coming out, their CPI and PPI. I always focus on the core because that's the more consistent numbers and give you deeper insight. There's also OPEC report coming out, so that's going to show supply and demand for oil. And there's rate decisions coming out from Bank of Canada, New Zealand, and of course the ECB. Now keep an eye on earnings reports, especially if you're trading stocks or the indices this week, because some of the US big banks are going to start reporting along with plenty of others. So, those earnings reports will start to pick up pace now. So, anyway, that sort of pretty much sums that up for this week. I'm just going to move on now to my technical analysis, so I hope you'll stay with me for that. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that inner trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And, this is to help you reach that next level time and again. And, I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.